Investors and traders, welcome to the channel Market Chart Pattern. Today is 26th of September 2024. Hope everyone is having a great day. We will be taking a look at the key markets for the United States, but we will actually be starting by taking a look at the foreign markets. As always, this video is for educational purposes only and it's not a financial advice. So let's take a look at the ETF, which is the iShares China Large Cap ETF. Now, China has actually been injecting liquidity in the markets by having a stimulus package. And quite some time ago, I think it was in the month of May, perhaps, I done a video about the Chinese stocks breaking out. So I think it was at around here when this trend line was broken, and there was a separate video done for the stock of Alibaba as well, and I'll actually do a separate video just on Alibaba, showing you what the patterns had been telling us, actually telling us way in advance, and what sort of targets to look at, but it's going to be a separate video. So what we have seen this week is the weekly candle. Of course, the week is not complete yet. We have got Friday's trading tomorrow, but just look at this candle, how powerful this candle is, and it appears to be moving towards this 38.2% retracement, and this is where the 200 week moving average is coming here as well. So just moving into a bit of a resistance, and we'll have this ABCD completing here. So 3370 had been our target. It took quite a while to get there, but now it's accelerating. And of course, on the fundamental side, we see that big announcement coming from the Chinese government about the stimulus package, because they want to basically ensure that the real estate is not falling too much down in value, but of course that's also spilling into other asset classes. But our patterns were warning us, especially break of this trend line way in advance, that something of this nature was in the making. Now, if we just move back to the daily chart, this is what the daily chart looks like. Here we go, and we can see that pretty big gap up here. Um, on today, and because it's an ETF on there is a fair amount of FX effects involved in this as well, so it moves rather quite in an erratic way, but on the weekly chart it looks more smooth. So it looks like it's gonna go and hit our targets between 3342 and 3480, and I believe it was because of this announcement the US markets overnight were really bullish as well. However, after the economic data came out today, some of that bullishness did wane out a bit. Now I'm gonna take a very quick look, not a deep look, into the Alibaba stock. Here we go. So we were watching for this Alibaba stock around here back in April and May, and this trend, this wedge pattern was also broken, or you can call it triangle pattern as well. And look where Alibaba is now, and what the patterns are calling for is about $160. Could be the target on Alibaba. So quite a while, maybe 60, nearly 60% higher from where it is. An interesting one. So I'll do a separate video about this one. We'll recapture some of the patterns, especially uh, involved in the Alibaba stock. So I think that will be a pretty good educational video as well. Okay, now let's move to the US markets, and we'll start by taking a look at the dollar index. So dollar, as we had taken a look before, it's just range bound, and it is range bound because it's really at critical areas here between 100 and 99. Moving below 99, the dollar will, in my opinion, accelerate to the downside, and we are already seeing quite a lot of things, in reverse of the US dollar weakness, what it could do to stocks such as whale, the stocks which are kind of involved in the exploration and extraction of metals, could be base metals, precious metals, for example. So those kind of stocks, which are really depressed actually, but they are likely to benefit, and also commodities such as soft commodities as well. So the dollar looks, it's going to be in a trading range for quite some time. It's not breaking our bearish symmetry as of yet. But there is a chance that some strength can come in the dollar, and it could move as high as 101.68 by the looks of it. But if it keeps on, if it just breaks 99, that's the key level that we are watching. And if we take a look at the Euro USD, the price action today, you can see that it's also looks pretty range bound, and we have got a major target around 112, between 112 and 112.30 and 112.70. That's the gray box here. It looks like it is marching towards this one. And then if we take a look at the GBP USD, this is one of the strong ones. It had a pretty strong sell-off on Wednesday, and it has actually captured all of it. Let me see whether it was an outside day today. So the low was 133.123. So it had an identical low, so that's an interesting thing. But it took out the high of yesterday, so that's really interesting. Where it is right here, it's 1.6 minute expansion. We could see we have already seen some resistance come in. Uh, but here is maybe it goes into a bit of a trading range. Getting above 134.25 is very bullish for the British pound. Now let's take a look at the Japanese yen versus the US dollar. Here we go. And this was the pattern that we had identified, and this is just getting stronger. It's moving in this. Looks like it's going to go and challenge this swing high around 147. So essentially the US dollar is getting stronger against the Japanese yen. Okay, now let's take a look at the treasury market. So we'll start by taking a look at the shorter end of the curve. So this is the 2-year treasury note, and what we can see is, let me actually blow it up. Um, Here we had identified these levels as a potential bounce in the yields, and this is what we have seen in particular today off the back of the economic data which came out today. So it had what do you say, a sell off in the treasuries essentially, and the yields moving higher. So it's in a region where it's been range bound for quite some time, and that's because of the structural support here. It's gonna require moving below or breaking below the low of 24th of March 2023 would be something really interesting to watch, because it's going to indicate that the Fed might be is going to be pretty aggressive in their rate cut. So we could even expect another 50 basis point rate cut from Fed. So, but this chart will actually tell us or warn us in advance. Now let's take a look at the 10-year Treasury note. And this market actually, as you can see, also the yields moved higher for this. Now looks like it wants to go and test this trend line right here. I thought that maybe on last Tuesday we might have seen a pretty good low in here, but it just keeps on selling off and taking out the lows of last Tuesday. Looks like it wants to go down a bit further, which means higher yields. Now on the long bond futures, so let's take a look at ZB. It is very close to its symmetric low. So this is the symmetry. It might have actually pretty much completed today. That's a possibility. And here, compared to the treasury note, you can see its yields were a little bit lower. So that's really interesting. And if we begin to see the this one move higher, or taking out the highs of Thursday, then that's going to be a pretty good development. Then it's going to indicate that maybe we might have seen a low come in yields, excuse me, in a high come in yields, and a low in the prices. and this trend line is where the low might have come in very close to. Let me see. Oh yeah, and actually it was right at the 61.8% retracement as well. So that's really key. That is really key. Here we go. We have the trend line. We have the 61.8% retracement. So that looks like nice. I think the long bond future is actually trying to make its way higher. So that's good because longer term yields likely to move lower. Now let's take a look at the TLT, which is the ETF 20 plus year duration. It's got a pattern which is very similar to long bond futures. And here, in fact, the trend line is not as nice as what we have in the long bond futures. I think it's because of the function of this being an ETF, whereas that is futures. So it's got more regular trading hours, as in like it has Globex hours as well in addition to regular trading hours, and this one of course has the regular trading hours only, again finding support from 61.8% retracement. So I think we might have seen a pretty good low but need further confirmation for the long bond futures and treasury notes. Now what we'll do is we'll take a brief look at the gold market because gold actually did something really interesting. Gold hit that magical 2700 mark today. So as you know that going back to our longer term monthly charts, 2700 had been our target for pretty long time, and this is a monthly chart. The month is not over yet, but you can see what a strong month it has been, and the gold actually gained almost $300 during this month. And the chances are here it has the potential to go a little bit further. But psychologically, 3,000 is the next kind of big figure out there. So there's a possibility that gold remains that strong. It might actually go for 3,000. But the patterns tell us that watch for 2,700, 2,700. I'll give it anywhere between 2,700 to 2,750 because the strength in gold. And here, some people who have been, let's say, long gold, they want to take some profits in their whatever vehicle they have used, such as GLD. That might not be a bad idea, but again, it's not a financial advice. But the price action will begin to tell us a lot more. But look, really bullish looking monthly chart, so excellent. But this is where this is the thing about the patterns. This is what the patterns were forecasting months in advance. And in fact, this ABCD, you can see the purple one. This is years in advance. This is going back, 2015, and it was forecasting 2700 9 years ago, almost a decade ago. So there you go. That's the power of these patterns, if you believe in them. Okay, now on the other hand, let's take a look at the comics silver. So the silver actually has done what we wanted to see silver doing, and that was actually this completing this ABCD, which it has done pretty much to the tick. However, we have this black one higher about 33.86 to 35.30. The chances are that once it is able to properly clear this structural resistance, so it's also our target because of ABCD, but it's also structural resistance here. There's like to be some profit taking. All those people who got long around here. Um, Once they're able to clear that, then these are the targets we could be looking at. There's a further possibility that on the flip side, it could actually move back into the range. So we were pointing out to this range when the market actually hit these levels, and then it's just been basically moving higher, and it has met our target, the shorter term, and then possibly we think 33.80, and then higher we have 35.30 for silver. Now these are comics futures charts. If you are watching the same for the gold, if you're watching the spot market, then your price levels are going to be different, slightly different, but the patterns are pretty much similar. So what I'm talking about, giving you these exact levels for the spot market, these will be a little bit different. Let me know in the comments if you want me to actually, if you guys actually follow more the spot market. I can use those charts as well, but the futures market, because a lot of professionals are actually trading in the futures, I just follow this market. But if you like me to follow the spot market, I can also add those, or I can actually switch over to them, or just use them as the primary market, and then we make the futures, the comics market, as the kind of our secondary market to take a look at, because we also get some additional data for futures, such as the open interest on daily basis from the exchange, and also we have the commitment of traders report, which we like to take a look at time to time. It's published. Well, the data is collected every Tuesday and it's published every Friday. So it's not really a report you can use to time, but it gives you certain kind of information that how the big players might be positioned in the marketplace. So it's kind of giving you some sort of a condition developing in the market. Professionals being either over really long on one side, or they are one side and really short, then that could actually give some insight into how the participants are actually positioned for a particular market. Now let's move into our stock indices. Let's start by taking a look at the S&P 500. So S&P 500, it just keeps on dragging higher, keeps on chugging higher, making new all-time highs, and today was no exception. But look, it closed lower as well. In fact, it also opened with a gap. Our shorter term target is a little bit higher, around 5,800 on the cash. The high today was 57.67. So most likely it's going to get into this, the gray box that we have here. There are further targets as well. This big blue one here, I'm not sure whether we'll be able to get there in the month of September. Most likely not, but we have some targets higher there as well. And then if we look at the futures chart, this is the S&P 500 E-mini futures. We have 58.45 coming up pretty soon. This was one of our shorter term target, but really looking for this to get into this gray box, also complete this ABCD, the blue one here. So it looks like it's got a little bit of further to go. Now moving to the weekly chart, this is, on the weekly chart I was showing you about 6100 is the kind of level which is possible. So there you go, around anywhere between 6100 to 6150 roughly, 6170. Now if you can look at it in two ways. That's the target, but where it is right now, you can see there is just not much there's not much upside left. But who knows, this market has been so strong, it might just keep on carrying higher for much longer. But in terms of this big ABCD being completed, it's just a few hundred points higher now. And then if we move to the NASDAQ 100, let me actually show you the cash market, especially on the daily chart. If you recall, we were watching for this market to complete or fill in this gap here, which it did today. And there was a big gap the way the market opened today overnight. I believe that was because of the news of stimulus coming in from China for the Chinese market, but of course, other markets, liquid markets, they also kind of benefited overnight. I do not know the exact reason. This is what I think it was. But it has filled this gap. It's now in this gray region, and we were looking for anywhere to basically get to about 50% of this, and maybe towards the upper boundary of it. It went to 50%, closed lower, so that's an important thing to note. And we'll be watching what sort of follow through we get tomorrow, whether we get some sort of follow through in which we had the low of today, which is 26th of September, 19,966 and 99 is taken to the downside. Then we could see further pullback, or we could see a trading range behavior. And of course, the market being that strong, it can just keep on going higher. Now if we take a look at this on the futures chart, so this is the NASDAQ 100 futures, we see a slightly different picture because we don't see the gap here. This one, because it's the market is has got hours which are outside of regular trading hours, and here, what we have seen is we were looking for it to get into this gray box, which it did, and it went right to the 1.272 expansion of this swing here, and then it just pulled back, but it's not a negative close, unlike the cash market. So here, one scenario is it might just go in a trading range. I believe this 20,478 is a bit of a resistance level. The other possibility is that we are actually in this ABCD, which could in fact see this market tackle the highs, all-time highs back from 11th of July, or maybe even make slightly higher high. That possibility is there, and that's going to be a really interesting thing to watch. And if we just go back on the weekly chart, here we go. So that's the big ABCD which completed right here, and that smaller ABCD actually calls for it to get around here, so kind of a double topping formation. We'll have to wait and see, but the market has been relentless. It's been just been moving higher, but it's also closed that gap which we're looking for the market to get into. So that's a really interesting one. Now, let's take a look at the Dow Jones Industrial, but through the eyes of the E-mini futures. So here, it had a bit of a, yesterday it had a bit of a negative close from this 1.272 expansion. Now, the ABCD on the daily chart, the purple line calls for a little bit higher, around 43,200. Whether it's able to get there, we'll have to wait and see. In terms of whether it will complete the ABCD or not, because we are at at least a minor resistance 42,550 from this 1.272 expansion. It needs to get above this to complete this ABCD pattern here. Now the other one is this weekly chart, and here on the weekly chart, what is possible is, if, and there's a big if, S&P 500 is going for its completion of big ABCD pattern, the one in the black, then the S&P, the Dow Jones could actually move higher, get anywhere between 44,230 to as high as 47,346. So really interesting where the markets are at the moment. They keep on chugging higher. Negative news gets discounted. I believe that's because of the stimulus that is coming in from lower interest rates, so the Fed cutting rates. Maybe the Fed is going to be a bit more aggressive. But again, the patterns are telling us that we are approaching some really, really key levels in the market. So we just need to be prepared and watch these levels, and then the market will give us clues if we begin to see more topping formations. But we are getting pretty close to these at some sort of tops where we could see at least a fair amount of pullback to happen in these markets. Now, last but not least, let's take a look at the Russell 2000. This one has been a really weak one. Now, I think, well, I'm gonna remove this blue ABCD here, because it looks like it might be running out of time to do this. So it just remains range bound, not really looking very nice, to be very honest. And here we go, just remains here in a trading range. This market likes to do trading range. I was thinking maybe it could actually get to about 2340, a little bit higher, but thus far it has not done that. Okay, and let's take a look at the NYA, which is New York Stock Exchange Composite Index. Let's review this on the weekly chart. This pattern is, it has a pattern very similar to Dow Jones, right? And here looks like it also wants to go a little bit higher. So very interesting what the markets are doing, but they are getting very close to some really key levels, which also happen to be our target levels, but also complete the patterns. And when the pattern is complete, then we'll have to wait and see what the price action will tell us. Okay, so now if we just take a look at the foreign markets, let's take a look at the German DAX. So the German DAX has been pretty strong this week, and then if we take a look at, oh wow, there we go. So it's going for this um, 19,416. That's going to be the 1.272 expansion, and maybe a little bit higher to 20,000. So German market is also strong. If we take a look at the UK market, UK market is just range bound. The FTSE, in my opinion, is kind of a funny market. It has a lot of miners and stuff. Used to have more miners, but it's got less miners now because a lot of companies, quite a few companies actually, left the London Stock Exchange after Brexit, and they moved elsewhere. So this one just remains range bound, but it's got a potential to about 86.50. So this is what we are watching in the markets. I hope you will find this video of educational value. If you did, please give it a thumbs up, and if you like our technical analysis, then please subscribe to the channel, and if you do, then hit that bell icon button. That way you will know when new videos are posted. So with that, I will speak to you guys soon, and take care and have a great day. Good luck and good trading.